Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Welcome, Scott.
Jeff, how are you?
I'm doing well. Well, it's interesting and unfortunate to see the coronavirus has really become a headwind as additional cases have now been reported outside of China. We even saw companies like United Airlines today cut their 2020 outlook, that forward guidance that we really rely on as active investors. What's your thought process here as we will see certainly a slowdown in global growth?
Absolutely, and there's so much uncertainty at this point that companies are coming out. They are cutting guidance right now, but we really don't know the full effect and whether it's cutting guidance for just Q1 and Q2 and then expect to get it back at the back end of the year or what it may be.
Well, you're absolutely right. It's interesting to see Fed Chairman Powell. He talked about waiting to see the material impact of the coronavirus. So will the Fed potentially speak here unorthodox outside of the meeting if we do see the coronavirus continue to ramp up outside of China?
They may, and the likelihood of that in the market seems to be growing day by day. And it's really the Fed over the last 9 months or year or so that many people believe have backstopped the market and seen us rally to those new highs.
And you can follow that CME Fed Watch tool. We're seeing that potential rate cut over the summer happening in that increase of odds. So check it out on the CME Fed Watch tool. But let's get into the first lightning round, pal. You ready?
Absolutely.
Gold. Well, we've seen the safe haven attract a lot of assets. We nearly printed 1,700. What type of approach would you consider as we saw a tremendous rally yesterday in gold, and now all of a sudden it seems to be a little flat?
So an investor could possibly express themselves by selling the March week one 1,700-1,750 call spread in gold. And selling this call spread allows an investor to collect $450, which is a ton of premium based on where volatility levels are at. This call spread expires week one on March 6th, and April futures is the underlying futures contract here, trading at about 1655.
Yeah, you hit the nail on the head. That at-the-money volatility elevated above 17. That is not normal, folks. So we're interested to see how we can capitalize and express your opinion when you see option premiums either move up or move down. So this is great, Scott. I really like your opinion.
Great.
All right, let's remember, folks, that these are trade examples, not trade recommendations. But let's get a second lightning round. You ready?
Absolutely. Let's do it.
Global growth slows. Well, we just talked about it earlier, and now here we are really trying to assess and measure what type of slowdown will we have in global growth. We don't have a lot of clarity coming out of China. We're getting data in by the hour, so the markets are really in a little bit of panic mode. I know we're seeing volatility increase, but it's not quite panic, but we are seeing some significant selling pressure.
Significant selling pressure and significant volatility, again, elevating premiums.
Well, the significant selling pressure I'm really focused on, and in my opinion, I want to approach the NASDAQ E-mini 100. And the E-mini NASDAQ 100 is a really interesting contract. Certainly there's a lot of emotion. The FANG stocks live inside of the E-mini NASDAQ 100. But when you see this type of elevated volatility, Scott, I want to be approaching this, in my opinion, is to be selling a put spread. What is your thought process?
That is a great approach for an investor looking to capitalize on some possible elevated premium, especially down at a level where technically maybe that makes sense where there's some support in the marketplace.
Yeah, so you have to understand that the E-mini NASDAQ 100 can move up and down a couple hundred handles in a session.
Sure.
But the opinion I have is to be selling the March week one 8750, 8500 put spread in the E-mini NASDAQ 100. The sell of this put spread allows an investor to collect $1,120. It's a lot of premium, Scott.
Absolutely, and that is because of those volatility levels are so elevated. And this put spread expires week one in March 6th, so very short term. And March futures, the underlying future contract here, trading at 89.75. But again, that volatility we're talking about, that at-the-money volatility, almost 30 at 29.43.
Yeah, it's really interesting to see when you do see the emotion in the market, some of those higher beta names that live inside the E-mini NASDAQ 100, you will see additional volatility, and a potential way to capitalize that is through the option premium when you see these elevated moments in time.
Correct.
All right, well, thanks as always for coming on, Scott. I want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.